been very vocal in his opposition to Ron Paul's proposal to allow audits of the Fed's monetary policy. Joining us right now from Irvington, New York, is Rick Mishkin, who is a former Federal Reserve Board governor and a Columbia University professor right now. Also, our guest host for this hour, Republican Representative Ron Paul from Texas. And Rick, welcome to the party. Before we get things started, why don't we just ask the congressman to lay out a brief summation of his proposal to audit the Fed?
In the 1970s, they made an effort to audit the Fed, but instead what they did, they put more restrictions on auditing the Fed. There's always a token auditing of the Fed, and that still goes on, but it never allows you to find out what they really do, what transactions they do. So mine removes all those restrictions so that we can find out what kind of agreements they've made with international governments, with other central banks and financial institutions and all corporations. And also find out what they do at the discount window.
And then do what with that information?
Well, I think the American people want to know what's happening because there's a mess. And the most important thing is they're looking at the Fed, and that's my intent, is to direct attention to the Fed because, as I described earlier, that's the source of the business cycle. So that information is very important. But in this day and age, you know, the TARP funds, people understand that some people got bailed out, some people didn't get bailed out. But some people got bailed out with the Fed operation, too, and other people's were ignored. Some people got some money for it, and some people got top dollar, and some people got less. And we deserve to know. We have a responsibility to know who got bailed out and at what price.
Professor Mishkin, your concern about that proposal?
So the issue here is not that, in fact, we need to have accountability of the Federal Reserve and more transparency. I've been an advocate of that for a long time in my academic writings. The question is you have to do it right. And from my viewpoint, the Paul Grayson Amendment to the Financial Reform Bill is just bad legislation. It has unintended consequences that could be very, very problematic. So the issue here is that you do want to have information from the Fed, but the question is you want it done on a regular basis with a framework which actually gets the right information and also focus on the long term. The problem with this legislation is that it's very ad hoc, that any time that the Federal Reserve, and this is going to be very critical, by the way, going down the road, because as Representative Paul has mentioned, he's worried about inflation and debasing of the currency. If the Federal Reserve, when it gets to the situation where, in fact, it has to raise interest rates, there's going to be a lot of second guessing. It's going to be many people are going to be upset about it. If under this legislation, what can be done is that a congressperson can go and request an audit of the Fed on this particular decision. That's not the right way to do quote auditing of the Fed and getting information on terms of what the Fed is doing. Other countries, by the way, have done this and have increased the scrutiny of central banks, and they've done it right. I was involved as an outsider in terms of doing a report for the Swedish Parliament on the Riksbank, the central bank in Sweden. They now have set that up to be something done every 4 years. There is a framework that can focus on the long run, get the information that people need to have, because it is true that the central bank must operate in the interest of the public. This bill does not get what I think that the Representative Paul should want to happen, which is an accountable Fed that actually keeps inflation under control. And indeed, if this legislation passed, I think that there'd be very big concern in the market whether the Federal Reserve is going to be able to resist the pressures and therefore not raise interest rates when it needs to. And then we're going to go back to the great inflation, something that I don't think any American wants to have, including Representative Paul.
Congressman?
Well, I think it's a misinterpretation of the bill. Like he indicated that, you know, if there's a Federal Reserve Board meeting, we would go in the next door and audit it. You know, it explicitly prohibits that. Matter of fact, it's a very weak bill. You can't even look or ask any questions until 6 months later. And their argument is that this will politicize it, that Congress will be involved. Well, it's already politicized. I mean, some people get advantages, other people don't. It's political in the sense that Federal Reserve Board chairmen like to be renominated, so they manipulate the economy in order to try to have things doing well at particular times. It's politicized because it accommodates the deficits. Congress, you know, depends on it, and they monetize the debt. This whole idea that if we had our way and we knew what was going on, there would be inflation, or they would keep interest rates, you know, the Congress would want interest rates down too low. Well, how could it get any lower? Well, how did we get into this mess, and how are we trying to get out of it?
I guess
interest
the
rates at
argument
1%.
is if congressmen who are up for election every 2 years, would you be in a position where significant numbers of Congress would want to keep those rates?
But they don't have any control.
Zero.
This bill has nothing to do with this. It has a gross distortion. They didn't read the bill. They don't understand the bill. It explicitly states that you can't do this, and it has nothing. I couldn't get 316 co-sponsors of this because, you know, progressives want, they always, you know, they do want a lot of money supply. I want less. So we had no agreement, no intent. In order for me to get a broad spectrum of individuals to support this bill, I had to make sure that this was just transparency, has nothing to do with it. And the other argument that is made frequently is, oh, you know, if we find out that so-and-so went to the discount window, that's going to hurt the bank. Well, if the insurance happened to be private, and they might want you to know about the bank, and it would be that evidence, that information would want to come out. But this would only come after 6 months. And besides, the Federal Reserve shouldn't be there for hiding information and protecting bad banks as a large group. That's how you get big bubbles and all banks into trouble.
Professor?
So the issue here is not that, you know, there is a concern. I think the American public does want to know what's going on. The problem is the devil's in the details here. That there is actually a serious problem in terms of institutions that take loans. If that information comes out too quickly, they're not willing to take out the loans. This actually problem was a very serious one for the discount window. It wasn't being used at all. It's one of the reasons why the Federal Reserve, and I was there when this happened, decided to set up new facilities so that this so-called stigma problem would disappear. And in fact, those lending facilities then did work.
What was wrong with banks?
Problem.
What was wrong when banks didn't want to go to the discount window? What was the problem that
was
created?
Particularly because when you're in a situation where you have a crisis of the type that we had, that banks, if they do not get liquidity, in fact, banks frequently are not willing to sufficiently protect themselves when bad things happen. A big problem during this crisis was that banks did not want to raise enough capital because it would dilute the shareholders. Well, the problem was they didn't get enough capital, and look eventually what happened. And we had a system that actually folded up. So the problem here is that if you have transparency, which doesn't allow you to do the job, there's a problem. You do need to have transparency on a long-run basis, and in fact, one of the issues that you mentioned, which I think is very important, is that politicians do think it's more short-term because they need to. They have to get elected. That's the democratic system. And indeed, one of the things that a tremendous amount of research and economic theory indicates is that insulating the central bank from short-term political pressure is critical to success. When that hasn't happened, that's when you get the debasing of the currency that Representative Paul is so worried about. That happened in the 1970s, for example. It's happened in many other countries. One of the big trends throughout the world has been towards more independent central banks, but also setting up procedures so those central banks are accountable. And we've seen that done elsewhere. It's been done right. I think that there are increases in transparency that the Congress could require that would be very helpful. I think that a more serious process of finding out what the Fed does and having it explain itself could be done. But this bill does not achieve that. It's a bill that actually will harm the ability of the Fed to do its job, and at this particular point in time, that could be disastrous.
Tell me specifically what in the bill has you most concerned. I mean, you guys seem to be talking over each other on some levels.
Right. It's the ad hoc nature of the process of auditing. So, first of all, there is a lot of auditing that goes on into the Federal Reserve in terms of the GAO does run audits. For example, how the Fed spends its money is subject to scrutiny by the GAO, and rightfully so, because you don't want a central bank wasting taxpayer money. So that kind of thing does go on. The issue here is that when we look at monetary policy, we want to ask, is the framework that the central bank is using one that produces good outcomes for the American public? And that's something that you want to set up in terms of regular reports, where the Fed has to report to Congress on a regular basis. I actually would like to see the reporting done not twice a year, but 4 times a year. That we'd also, I think, could beef up the scrutiny and the seriousness of the questioning of the Federal Reserve by, in fact, having independent experts as part of that process. There are a lot of things that could be done which could improve the transparency of the Federal Reserve, could improve the accountability of the Federal Reserve, but not subjected to short-term pressure.
Congressman,
and the problem here, that this is a case of where there is a lot of hostility to the Fed. Representative Paul has on his website selling End the Fed T-shirts. I think that this bill is actually disingenuous.
That's
it does not
just
focus
good
on what
fashion
needs to be
taste
done.
is what that is. End the Fed. Those are just cool T-shirts.
Actually, the T-shirts look pretty nice.
Are you suggesting that if your bill had been in place, and if it had been law since, say, the beginning of Greenspan's tenure, that rates would not have been kept as low for so long?
No, but it might have indirectly changed things. They might have realized the Fed was serving special interests and maybe helping some people and not others.
On their own, or because Congress put pressure on them to change?
No, I don't think so. I think on their own, because we don't know what they do. And the fact that everything is on the books, if they extend a loan, I mean, they can create trillions of dollars, and we don't know. And they say, oh, no, we know every single thing we need to know. Well, then they should open up the books and let us know. And this whole idea of timing is where he gets it wrong.
We have to go. We got some breaking news. Rick, thank you for your time.